Hey everyone, welcome back to Corporate Decoder, the place where we sift through corporate filings so you don't have to. Today, we're diving into the Smurfit Westrock 10K. It's supposed to be a year-end report, but honestly, after reading this thing, I feel like I need a whole year just to understand it. I'm kidding, obviously. But seriously, this report is a monster because of one big thing, a strategic combination. Get ready to learn about the merger of two packaging giants. Let's get right to the point. This is Smurfit Westrock's first official year-end report, and it's packed with information about their epic merger. Think of it as less of a simple quarterly update and more like trying to combine two giant puzzles into one picture. It's the story of Smurfit Kappa, a big player in Europe and Latin America, teaming up with Westrock, a North American packaging leader. Before we get lost in the numbers, understand this wasn't just a friendly handshake. It was a full-blown business combination as of July 5, 2024. Essentially, Smurfit Kappa, which was already big, swallowed Westrock. This created a paper-based packaging titan with operations all over the globe. Now here's a fun twist. Even though Smurfit Westrock was technically a new company, accounting-wise, Smurfit Kappa is considered the acquirer. So when we talk about the historical financials like the revenue from before the merger, we are really just talking about Smurfit Kappa's money. The corporate headquarters is still in Dublin. They're even listed on the New York Stock Exchange now, trading under the ticker SW. The company has over 521 million ordinary shares outstanding as of March 3, 2025. So what does Smurfit Westrock actually do? They're in the business of sustainable paper-based packaging. That means everything from the cardboard boxes your online orders arrive in, known as corrugated containers, to the fancier consumer packaging on your favorite snacks, often known as paperboard. They also make things like craft paper, solid board, and even those bag-in-box contraptions for wine. They operate a huge network including mills, converting plants, and recovered fiber facilities. They even own about 301,000 acres of forest plantations in Latin America. Their vision, and I quote, is to be a globally admired business. To get there, they're focusing on three key areas: converting or turning raw materials into packaging, optimizing their paper system, and integrating the cultures of Smurfit Kappa and Westrock. Their strategy comes down to 6 priorities: integrating the two businesses, growing in key markets through focusing on sustainability, focusing on customers and innovation, enhancing how they make the product, hiring and keeping the best people, and investing money wisely. Now let's break down the 3 operating segments. First, there is North America, which accounts for 47% of sales. It's one of the biggest producers of containerboard, paperboard, and craft paper, primarily serving the corrugated packaging market. It also makes consumer packaging products. In 2024, their North American containerboard mills churned out 8.2 million tons, and their corrugated operations produced nearly 84 billion square feet of packaging. Then we have Europe, the Middle East and Africa, and Asia Pacific, accounting for 45% of sales. They are a top European producer of corrugated and consumer packaging, operating 14 recycled containerboard mills. In 2024, they produced 6.2 million tons of containerboard, with their corrugated operations producing 97.5 billion square feet. Latin America represents 8% of sales. In Latin America, they are one of the largest by volume, with operations in 9 countries. Their mills there produce around 1.5 million tons of paper, mainly containerboard. The Latin America segment pumped out around 23 billion square feet of corrugated containers. How does Smurfit Westrock sell all this packaging? Mainly through their own sales teams, but they also use independent representatives and distributors for certain products. A lot of their sales are based on longer-term contracts with clauses that let them pass on raw material cost increases. They face big competition from other packaging materials like plastics and metals. To get ahead, they are competing on price, innovative designs, great quality, good service, and also increasingly sustainability. The company's overall fiber sourcing is a mix. About 55% comes from virgin sources and 45% from recycled materials. They face potential price swings in energy, with their recycled mills using mostly natural gas and electricity, while their virgin fiber mills lean on biomass and natural gas. Smurfit Westrock is investing in innovation. They're aiming to develop circular packaging to reduce the impact to the planet. This is also a point that potential investors are focused on. So is climate change. They expect to report on both in 2025. It's worth noting that this company is massive, employing around 100,000 people in 40 countries. The company values safety. In 2024, their lost time incident rate, which is just a metric of incidents per 200,000 work hours, was at 0.27. The company has several communications coordinators and employee resource groups. They also invest a lot in developing talent internally, including training and mobility across the entire organization. If you're interested in learning about how the company operates, the Code of Conduct and Code of Ethics are available on their website. But here's the thing, Smurfit Westrock operates in a world of risk. As they put it, they're exposed to economic and financial market conditions beyond their control. This includes everything from recessions to geopolitical conflicts, and even the actions of their competitors. Downturns in the paper and packaging industry could be a major issue, not to mention the cyclical nature of the business, where overcapacity can easily depress prices. Like any manufacturing business, their earnings depend on demand. If people stop buying packaged goods, Smurfit Westrock feels the pinch. The price of raw materials like recovered fiber and wood pulp can fluctuate wildly, and so do the costs of energy and transportation. This is definitely something to keep an eye on. Operating in 40 countries is great, but also complex. There's trade restrictions, tariffs, changing regulations, and political instability to worry about. Currency exchange rates also play a big role. Cybersecurity is also a concern. A major data breach could disrupt operations and damage their reputation. Of course, a big risk is the combination itself. They might not realize all the expected benefits, and integrating two different cultures can be tough. Being a US-listed company comes with its own set of challenges. They're now required to comply with the Sarbanes-Oxley Act, which means increased costs for internal controls. They even admitted to finding a material weakness in their internal controls, which basically means there's a risk of misstatements in their financial reports. It's something to monitor and see how they improve it. Finally, there's always the risk that changes in accounting rules could throw a wrench in their financial reporting. Okay, now let's look at some numbers. Their ordinary shares were not listed on any domestic exchange or over-the-counter market before July 8, 2024. In other words, you couldn't buy their shares on the stock market before then. The company has filed all reports required to be filed during the preceding 12 months and has been subject to such filing requirements for the past 90 days and have submitted every interactive data file required. The number of shares of registrants' ordinary shares outstanding as of the close of business on March 3, 2025 was about 522 million. And finally, the document incorporates by reference information from the company's definitive proxy statement to be filed with the SEC, which means there will be more info available in another filing later on. Let's talk about leadership. Anthony Smurfit is the president and group chief executive officer. He is joined by Ken Bowles, executive vice president and group chief financial officer. They also have people leading North America, Europe, and Latin America. There was a recent change. Alvaro Henao is now President and Chief Executive Officer, LATAM, since February 1, 2025. He previously held a role related to integration and spent many years at Smurfit Kappa before the combination. Lastly, Ben Guerin serves as the EVP and Group General Counsel. He's been in-house at Coca-Cola for 24 years. On sustainability, approximately $127 million was spent on environmental efforts. And on the topic of reports, there is no attestation to its management's assessment of the effectiveness of its internal control over financial reporting under Section 404B of the Sarbanes-Oxley Act. One thing that's expected is that the company publishes an overview of their approach to climate risk management. The financial statements of the registrant included in the filing don't reflect the correction of an error to previously issued financial statements. Correction of errors are not restatements that required a recovery analysis of incentive-based compensation received by any of the registrant's executive officers. The registrant is not a shell company. Okay, so now for my take. Here's what I think. Smurfit Westrock has some interesting numbers, however it's hard to say much since the combination was just a few months ago, and the 2023 report is that of Smurfit Kappa, not the full combo. The numbers are hard to compare, especially when looking at metrics like net income. It's got a strong global presence, but the risks associated with trying to merge two huge corporate cultures and navigate all those regulations can get in the way of those sweet operational efficiencies. Right now, keep an eye on a few things: how well they integrate, especially those IT systems that have identified a material weakness. Those debt obligations, those are a little worrisome. The company says they should be able to handle it okay with their cash flow, but rising interest rates could become a real problem for them. As for the Brazil tax liability, any negative decision on this could affect their profit. Ultimately, Smurfit Westrock is playing in a world of constant change. But if they can pull it off, successfully manage the integration, ride the sustainability wave, and effectively navigate regulations, this thing could be a packaging powerhouse. Thanks for watching, and if you enjoyed this decoded information, please subscribe, like, and comment.